Hello and welcome to Dukascopy TV in the Geneva studios. I'm Sam Meredith, and joining me today to provide his insight is David Goodsell, Executive Director with Natixis. Thank you for joining us, David.
Sam, thanks for having me.
No problem. So, first of all, can you tell us about this study you've been working on? What exactly does it focus on?
Well, the Durable Portfolio Construction Research Center is an initiative that we began about 6 years ago with the goal of looking at individual investors, advisors, institutions, and how risk and their attitudes to the market are coming together. What are the pressures they have? Our most recent study is our 2015 study of financial advisors, and it really looks at new roles that are evolving for advisors over time.
Over time. Okay. Well, did you notice any major differences between people in different countries? Were there any distinct things that you noticed there?
Well, I think we do see big global trends. Often when we see things about people not having plans or not having goals, it's pretty consistent. Return expectations can vary country to country, and I think that has a lot to do with the risk tolerances of the individuals in that market. For example, globally, we see that individuals expect a return of about 9.7% above inflation, so real returns of 12 to 14%. It's a little lower in Switzerland, it's about 8%. But they also face the same challenge that other investors do, which is that they're very much conflicted between whether they should pursue returns or preserve their capital. And they're also feeling that if it came down to choosing between safety or investment performance, they're going to take safety every time.
Yeah, and speaking of investors, what about some common mistakes which they maybe fall into the trap of?
Well, it's interesting. We asked financial advisors what they think the most common mistakes or the most hurtful mistakes individuals make, and it really begins with making emotional decisions, looking at the markets and not understanding what you're trying to do. It comes down to having a short-term market outlook, forgetting to have goals, forgetting to have plans, being very much out of the long-term view. And it's interesting, that's consistent, something we see with the individual investors too, is that this year about 57% of the people we spoke to have no financial goals. 67% have no financial plans. And what makes it more challenging is 77% of those people are actually making decisions on gut instinct. And if you think of how emotional people can be, their expectations may be out of line, that's a very difficult situation to be in.
Okay, David, well, I guess the bottom line from this then is really what can we learn from this? What can investors learn as well?
Well, I think the idea is to look closer at what you're trying to accomplish, to really write down your plans and not just go halfway. We really need to understand very well what's happening, what you want to accomplish. The key here, we asked financial advisors about retirement, and they looked at their individual clients and found that very few of them actually have a strong understanding of what they need to retire. And the same is true for what they're going to need for income in retirement. And one of the big challenges is understanding what the lifestyle is going to be like in retirement. If they can't bring those together and have a rational plan for it, it's going to be very difficult when they do retire. So we'd like to say that the time to start planning retirement is well before you actually get there.
Sure. Okay, David, thank you very much for coming in today.
Thank you, Sam.
Be sure to check back with Dukascopy TV for more updates and exclusive interviews. See you next time.